let's bring in our first guest now that we've covered the top stories, some key levels in the indices to watch. And, well, I want to talk energies with David Williams. He's an investor. He's a forecaster at Page Trader. David, welcome. Good to have you with us. Before we talk energies, I was just pointing out how rates on the rise, combined with the U.S. dollar to new highs, 24-year highs against the yen, it's weighing on the indices.
Yeah, absolutely. It's weighing on the indices. S&P has all the indices, the Dow Jones, NASDAQ, and so on, are still under tremendous pressure. The dollar is in remarkable position. I think most people would agree that it's a surprise to see the dollar at the levels that it's at. And while we don't specialize in the dollar, we do follow it, and we do believe that it is putting pressure on these markets. If I can say for a moment, the S&P itself continues to show larger scale weakness, Ben, in our work by having failed to reach $4,367 back in mid-August. That was a very peculiar miss. And more recently, having failed to reach 4,024 on the upside on August 31st, and again on September 2nd, they couldn't reach 4,024. So it is our position that the S&P is in a much larger scale downtrend, and there are significantly lower prices that are likely before this downtrend is over.
Speaking of that, we're looking at a weekly time frame, and it certainly appears as if we shifted in terms of that very well-defined trend we had seen off the pandemic lows from 2174 up to the all-time highs of 4808. And I could bring more time into this chart and go all the way back 10 years back, and you'd see even longer in the tooth the trend that we've seen to the upside here. Talk to me, though, because you mentioned the miss at 4367 mid-August, 4024 into the end of August, and recently, as we begin the month of September, some of those failed attempts to the auction to the upside are reflection of bear market type scenario. Wouldn't you agree? I mean, we've been pointing that out to begin the week, basically. The failed attempts to get higher and limited amount of time spent at these upper levels is about what you'd expect to see and characteristic of a trend environment to the downside.
Oh, no doubt. I think anybody who looks at the market would have a tough time saying that it's in a bullish position. Since April of this year, our yearly S&P forecast has been that the S&P will trade back down to 3730 or lower in 2023 and likely complete that 3730 by the first quarter of 2023. They could go lower, Ben, than 3730, but we're quite certain they will be back down there in 2023. Additionally, we're watching in the month of September about how they handle any further test of 3870, just sort of nearby where we are now, to 3860. Because we think normally in September they would want to test that level. Again, we're not very far from that level right now, but we think it's important how they handle it when they get there. And if we start breaking it, you know, the bear trend continues.
That is solid. I like that. And we're going to keep an eye on that 3870, 3860 level. And to the point here in terms of your call back in April, I mean, we were trading 4,600 at the time. Okay, so just to our viewers to be clear, David's been spot on these levels. And not only in terms of the indices, but also as far as the crude and, you know, kind of tying this all together, one could argue that some of the weakness we've seen in the indices in crude tied to demand uncertainty. Let's talk a little bit